Hello everyone and welcome back. In today's video, I'm going to go over the top 10 ways to get a yield on ETH. Now this video is somewhat of a sequel to my top 10 stablecoin yields video, which I'll link in the top right if you haven't seen it yet. That video was one of my more popular videos, and what's really exciting about that video is a lot of those methods actually held true to today, which I expect to be the case with this video. So although the APRs and APYs will fluctuate, these 10 protocols or projects are probably going to be some of your best bets to get a yield on ETH in the weeks and months to come. We do have a lot to cover, so let's get right into it. But before we do that, please like the video and subscribe if you haven't yet already. Those actions really help me out, so I do appreciate it. With that out of the way, let's talk about our first project, which is going to be the base of a lot of different yields in DeFi, and that is Lido. So what Lido allows you to do is essentially stake or deposit your ETH in their smart contract, and they use that to create new validators for ETH2. You can see here it's a very large protocol with about $3.5 billion of assets staked. And you can see right now it's paying out a 5.5% APR. Now, when you deposit ETH into Lido, you get back a token called Staked ETH or STETH. This token is always going to be pegged one-to-one with ETH, but by holding this token in your wallet, it's going to rebase, which means that if you have the Staked ETH token and you deposited 1 ETH, on the first day you'll have 1 ETH, but over time that amount that you hold in your wallet will slowly increase. So as I mentioned, this Lido Staked ETH product is going to be the base APR for a lot of different other projects, but you can always revert back to Lido if you just want a simple yield on ETH. So I really think this is a great place to start for a lot of people, is with the Staked ETH token from Lido. So once you have that Lido Staked ETH token, there's a few different things you can do with it, which are going to be some other top ways to get a yield on ETH. Now the first way to use that Staked ETH token is through Curve here. So if we scroll down here, you can see Curve has a staked ETH pool, which is just ETH and staked ETH. And you can see it's getting a base APY of 3.02%. It will get an extra 7.8% bonus in Lido governance tokens. Now this is obviously very compelling and actually goes above and beyond what you get with just the staked ETH token. So if you were to total this up, that would be a little over 10%. But the important thing to note here is you are getting those Lido tokens. So if you just want to stack ETH, you would have to manually sell those Lido tokens back to ETH. In just a moment, I'm going to show you a way to automate that process, but it's definitely worth knowing if you want to go direct into Curve. One big point of confusion I want to highlight for people is that because this pool is going to have 50% ETH, regular ETH, and 50% staked ETH, that 5.5% staking APR from Lido is going to be cut in half, just because when you deposit into this pool, whatever asset you deposit, you're basically going to get claimed to 50% ETH and 50% staked ETH. So you're always going to get half of whatever staked ETH was earning in the underlying asset. The point here is that the additional rewards in the Curve token and the Lido token will make up for that. So the third way to get a yield on your ETH is through Yearn. So as I mentioned just a moment ago, if you're using Curve manually, you have to sell those Curve and Lido tokens yourself if you only want to stack ETH. So you have to sell them back to ETH, which is obviously time intensive and gas intensive. Now with Yearn, they automate that process for you. So I'll just click Go to Vaults here. And if I scroll down here, you can see there is going to be a Curve Staked ETH option right here. And we can see the Curve Staked ETH option is getting an 8% APY. Now the cool thing here is that getting into a Yearn vault is very convenient. So if you just have ETH in your wallet, you can just deposit ETH and they'll automatically do the conversions in the backend for you. So the great thing about Yearn here is it really simplifies the process. You're only going to be accumulating those staked ETH tokens through Yearn. You don't have to worry about selling Curve tokens or Lido tokens or getting exposure to those assets either. So the most important thing to note about Yearn is that it actually has a significant amount of platform fees. So the protocol takes a 2% annual management fee off your entire balance, and they also take a 20% performance fee. Now, if you have a large position, I would recommend you probably manage it yourself in Curve. So every week you sell those Curve or Lido tokens, unless you're bullish on them and want to hold them. If you have a smaller position and gas is going to be a large percentage of your portfolio, something like Yearn is a great and safe option. So let's move on to the fourth way to get a yield on ETH. So the fourth way is Convex Finance, which I think is going to be a great option for a lot of people. If you're not familiar with Convex, I will link in the top right a full video breakdown I did on it, which I definitely recommend checking out before you deposit into Convex. With that said, I'll go over how it works at a high level in this video. So I'll just click stake, and you can see this is basically going to list all of the Curve LP pools that you had available to you on Curve and Yearn. So I'll scroll down to staked ETH here, and you can see here that Convex is going to give you an 11.13% yield on staked ETH. So what Convex essentially does is they boost your Curve rewards by buying a lot of Curve governance tokens, locking them up, and then boosting the yield on the staked ETH pool. Again, it's a bit complex. I break it down fully in that Convex video I did, but the end result of this is that your yield is going to be higher than Yearn and then higher than Curve's normally. So right now it's about 11.13%, and next week it's projected to be 11.5%. So I just clicked on the staked ETH tab, and you're going to see that you basically get your rewards paid out in 3 governance tokens: Curve, Lido, and Convex tokens. Now, if all you wanted to do was stack ETH, you would have to manually sell those every week back to ETH to keep compounding your position. Again, the same thing probably applies here that I mentioned with Yearn. If your position size is smaller, you probably want to do this in an automated way through Yearn, but if you have a very large position and can manage it every week, it definitely makes sense to use something like Convex to get a higher APR and then to sell those governance tokens back into ETH. With that said, let's move on to the 5th way to get a yield on ETH. So the 5th way to get a high yield on ETH is through Tornado Cash. So I cover Tornado in a full video, which I'll link to the top right. So if you're interested in this, definitely check that out before staking. But essentially, Tornado is a privacy protocol built on Ethereum. So the way Tornado Cash achieves its privacy is it basically breaks the connection between a deposit address and a withdrawal address. That means that you can deposit ETH, wait a little bit of time for other people to deposit ETH after you, and then from a new address that has no transaction history, you can withdraw that ETH into it. So to show you how that works, you can see here that I have a deposit tab, and I can choose the amount that I want to deposit. In this case, we're talking about ETH, but there are other assets. Now, as I mentioned, this is a privacy project, so we want a lot of other people depositing in the anonymity set to ensure that our transaction can become anonymous. To incentivize deposits, Tornado actually has an anonymity mining program going to incentivize more people to put funds into Tornado. So I will share this spreadsheet below, but you can see there's a different ROI depending on how much ETH you deposit. So if you deposit 0.1 ETH, you're going to have a different ROI from depositing 100 ETH. Now, there are a lot of factors that go into it, but right now you can see that a 6-month ROI for depositing 1 ETH is 23%, which is pretty unheard of. That's about a 46% APR. You can see the 6-month ROI for 10 ETH deposited is 8%, and for 100 ETH, it's 7.5%. So these are some of the highest values that you can really get anywhere on Ethereum. What's really cool here is there's a lot of fairness to the system, so whales can't just take all of the rewards. The higher rewarding pools are the lower ETH pools, like 1 ETH and 10 ETH. Now again, I don't want to go too in-depth on this because I have a whole video on it, but essentially these rewards are going to be coming in the Torn governance token. In my opinion, Tornado is really critical infrastructure that we have in DeFi for helping with privacy. But full disclosure, I am a community multi-sig for Tornado, so I do have a bit of a bias there. So the 6th way to get a high yield on ETH is by selling covered call options through Ribbon Finance. So again, I have a full video dedicated to Ribbon, which I recommend you checking out, but just at a high level here, I will switch over to the products tab, and you can see that you can deposit ETH and get about an 11% APY on that ETH. So in my full video on Ribbon, I go over how these covered call options actually work, but it's important to note that if the price of ETH spikes unexpectedly, there is the opportunity to actually lose money in these vaults. So that 10% APY definitely does not come without risk. If we scroll down a bit here, you can see how it's actually structured in the weekly strategy snapshot. So currently the price of ETH is about $3,150. And you can see here that the strike price they chose for ETH is $3,500. So if ETH goes above that price, you're actually going to lose money for depositing into this vault. Now, I think Ribbon is a great supplement to an ETH staking portfolio, but it's probably not something you want to go all in on. The reason for this is if the price of ETH goes up unexpectedly, instead of getting to enjoy that ETH went up so much and celebrate, you're actually going to lose some amount of ETH because you have to cover those options that you sold. So next up, I want to cover Element Finance, which is a way to lock in a fixed yield on ETH. ETH. Now this actually does use staked ETH as a base, but I didn't want to cover it in that staked ETH module just because it's so different and a bit complex. Again, I have a full video on Element Finance if you're interested in going fully in depth, but essentially how Element works is you're able to deposit a yield-bearing asset and it will lock in a yield on that asset for you based on the market rate. So I'll just go to the basic UI because it's quite simple to understand, but you can see you can deposit that staked ETH token into Element Finance. Now the yield that you're locking in right now is about 8.1% APR, which is obviously great, and once you lock that in, that's guaranteed whatever happens to the market. With the price of ETH going up recently in the past couple of weeks, we've seen yields pick up a bit. Who knows if they could go up in the future or down, but this could be a pretty good opportunity to lock in a good rate of return on ETH. Just to show you how it works, you can see if I deposit 100 staked ETH tokens, which is just 100 ETH, I'm going to get 101.4 ETH back when this reaches maturity. What's interesting here is that this fixed yield opportunity reaches maturity on October 15th, which is only a couple of months away. I hope they add different products with a longer lasting maturity in the future, because right now you can only lock in this rate for 2 months. But in the future, when they add a 1-year duration, a 2-year duration, etc., you can choose to lock in that rate when it's appealing to you, which is very exciting to me. Next up is Alchemix. Now, Alchemix is definitely a fan favorite, and again, I have a couple videos fully dedicated to Alchemix that I'll link below, but I did want to go over the yield-bearing opportunity for ETH that they have going right now. So if you're not familiar with Alchemix, it essentially allows for self-repaying loans that are non-liquidatable. So you can deposit ETH and then withdraw ETH against your initial ETH that's being used as collateral, and you can never be liquidated, and you can do whatever you'd please with that ETH that you withdraw from the protocol. Now that is a great way in itself to get a yield, but the cool thing about Alchemix is that they actually have a liquidity mining program in place right now that gives you a pretty high yield on ETH. So I'm going to go over to the farm tab here, and you can see that if I stake ETH in this LP pool, I'll get a 14.18% APR on it currently. Now, Alchemix uses Saddle as their exchange, so you'll have to provide liquidity through their pool if you want to get this yield. So if we go over to the Saddle tab here, you can see that there's that ALETH pool, which is basically going to hold 3 variations of ETH. Saddle is a bit newer of a project, but they do have great investors backing it, so I would definitely trust this platform, and I do use it myself. After you deposit any of these 3 assets into that pool, you then have to go back and stake it on the Alchemix site. Now, Saddle is pretty much exactly like Curve, so if you have any one of these assets, you can deposit just that asset, but you are going to be taking on exposure to all 3 assets in the pool. Very important to note here is that your rewards are going to be in the Alchemix governance token, so you're going to have to manually sell that back to ETH if you just want to compound your ETH position. So let's move on to the 10th and final option on how to get a yield on ETH. So the last way to get a high yield on ETH is through Index Coup's Ethereum 2x Flexible Leverage Index, or the 2x FLY. Now what this token essentially does is it gets you 2x leveraged on Ethereum by taking out a loan on Compound. Again, I have a full video dedicated to this that I will link you if you want to learn more. But essentially what you would do to get a yield here is you would want to provide liquidity for ETH and the ETH 2x Flexible Leverage Index token on Uniswap. If you were to provide liquidity here, you'd essentially be getting 1.5x exposure to ETH, so you're definitely going to have a bit more volatility, which is definitely something you need to note. So if I go over to Zapper here, you can see that providing liquidity on Uniswap v2 for the ETH 2x FLY ETH pair gets you an 18.5% APY. Obviously, this is very exciting because that APY is going to be paid back in ETH and ETH 2x FLY tokens, so you're really only getting exposure to ETH and just compounding that ETH position. Regarding impermanent loss, I do a full breakdown on how you'd calculate that in this Flexible Leverage Index token video, so I'd recommend you check that out. But the short answer here is your impermanent loss will be a bit limited because these tokens are very correlated. If ETH goes up 100%, then the 2x FLY index should go up 200%, so they're always going to stay somewhat within range, which limits impermanent loss significantly. Again, doing this is not without risk, so I would definitely recommend you check out that full video if you want to learn more. So that was the final way to get a yield on ETH. Now, I hope going over these 10 projects gave you a very good high-level look at how to get a yield on your ETH, but again, I would check out the full video breakdowns if you want to learn more. This is really just a starting point. Now, thank you all so much for watching, and I look forward to seeing you all in the next video.